And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. This is the show where we put you in front of where the action is in the broader markets. And boy, has it been a week. Lots that I am very looking forward to sharing with you. Take a look at the agenda here. Of course, as usual, we are going to go ahead and take a look at the current markets. Where are we after this rather bit of carnage in some of these higher growth tech names, but you do want to have a good sense of where the markets stand so that you can prepare yourself. We have a nice long weekend, but Tuesday, things will, of course, be on again, so you do want to be prepared. We're going to do a deep dive into leadership areas. Take a look at how they closed on the week, and this is really critical because leadership, as leadership goes, so too does the markets. So you're going to want to have a good sense of where, how those leadership areas performed, certainly going into the latter half of this week. So we'll take a look at that. Historical precedent, we are going into a September with an election. So we're going to take a very quick look at the broader markets in the September period going into that November 2016 election and take a look at what performed well during that period, just to have in the back of your mind. Take a look at how volatile it was during that September period. Also, we're going to take a look at strength during this week period. Again, the latter half of this Thursday and Friday were really damaging to some areas, but during that period, it can be really constructive to take a look at areas that withstood the sell-off that was taking place in the broader markets, all with an eye toward when and as these broader markets stabilize and resume their uptrend, those areas able to withstand the downward pressures generally and historically will continue to outperform. Also, uncovering positive recovery stocks. Certainly today we did see a renewed interest in those areas with some of the economic data that was reported, and so we're going to take a look at some of the recovery stocks that are now finally turning positive. They're reversing their downtrends and finally breaking back up above their simple moving averages. And also, of course, from my work, I will need to see some sort of fundamental strength that would certainly support a continuation rally in those stocks. So let's take a look. As always, I do want to provide a backdrop, see what the news was this week so that you can have a bit of a framework. So the markets did get hit. Technology stocks were hit the hardest, down over 4%. So of course, that's certainly newsworthy. But we did also get some positive economic data. This was earlier in the week. U.S. purchasing manufacturing report. It absolutely jumped during August. And this in turn has spurred moves into some of these industrial customers. We also saw factory orders up 6.4% in July, third straight monthly gain, and actually a 19-month high on that manufacturing report. So lots of strength kind of bubbling up here. So that's good news. That's where those recovery stocks start to become more interesting. And we did see the unemployment rate. It fell to 8.4% in August, and we did add 1.4 million jobs. So generally constructive there as well. Weekly jobless claims came in below that 1 million mark, so quite constructive there as well. So we can see that the economic backdrop, we're continuing to see a nice steady firming up, and that of course is what you want to see. Of course, the broader market's reaction is a whole nother ball of wax, so to speak, but certainly the backdrop is there. So let's take a look. The S&P 500, this is a daily price chart as usual, and we can see that we had this very sharp two-day drop, big volume characteristics, but very interestingly and rather bullishly, we can see that the S&P 500 closed the week up above this pink 21-day simple moving average. We're going to take a quick look at the NASDAQ as well, because the NASDAQ has been the clear-cut leader out of this bear market, and you want to pay attention to where that NASDAQ stands as far as leadership areas. The RSI, it did dip here, but it is above that net neutral 50 in positive territory. Those of you that are subscribers to my MEM Edge report, you will know that we have been highlighting the fact that that RSI did get up above that 70 into overbought. It was always with an eye toward a pullback, certainly not to the extent that we've experienced, but when you do get into that overbought, you can anticipate a pullback. And then the MACD remains up here in positive territory, and I'm just going to very quickly go ahead and put the stochastics. I do like to use these momentum stochastic indicators because they are faster moving. This is more for the broader market industries and industry groups. Stochastics did dip, but we are closing the week above that net neutral 50. Let's take a quick look at the NASDAQ composite overall, and then I am going to share a piece of work that I did, again, for my MEM Edge report. I put out a Thursday alert yesterday afternoon after the sharp sell-off, but let's take a look here at this NASDAQ composite. Again, this has been a true leadership area, heavily weighted with those FANG stocks as well as technology, heavily weighted. So big leadership area, also overbought. But the good news here is that the RSI, even though it did dip out of that overbought position, is constructive. And we can also see, let's take a look here, because that 21-day is this kind of purple line, and 11346 is the number. So we did find support at the upward trending 50-day simple moving average. However, we just barely missed closing above that 21-day. However, I am very pleased with the action that buyers did come in to support the stocks within the NASDAQ on that pullback to the 50-day. Stochastics up here above that net neutral 50. So let me go ahead and share with you, I mentioned with my MEM Edge report, among other factors that were highlighted in yesterday's report, I did go ahead and mark up the NASDAQ. This is an intra-day 1 hour price chart of the NASDAQ, and I took us back to this early June 11th, 12th period. It was also a Thursday, Friday going into the weekend, and it was also a period where we did see a sharp pullback. And what I did want to highlight during this intraday, within this intraday chart, was what to be on the lookout for a potential reversal, if you will, from that sharp pullback. So again, taking us back to June 11th, June 12th, tough period there. We did see on this intraday that eventually into the close on that 12th, the Friday, the markets at the very least stabilized, and that was very good news. Of course, we did come in on that Monday, and we resumed, I believe the next 6 days were actually up. But again, all of this with an eye toward how you can very quickly and easily get a sense of whether the NASDAQ was potentially heading lower, or were we stabilizing and potentially turning. So let's go ahead and take a look at the intraday NASDAQ currently, take a look at Thursday, Friday action and where we are. So two things come to mind immediately. This is that 1 hour intraday chart. And the first is that the sell-off was quite a bit sharper than that June period. But more important to our work is trying to identify, have we at least stabilized with an eye toward next week turning bullish on this super near term index. So we can see we very similarly, we did get into an oversold position, and in fact we do appear to have stabilized. I'm going to take us back to that June period to identify what we would need to see to turn near-term bullish, and that would be a price break above this shorter term 5 and 13 simple moving averages, also a MACD empty crossover. We don't need to see it turn positive on these intradays. It's that black line up through the red crossover that we would like to see. And constructively, we do appear to be on our way for that type of action. So that's something I did want to point out to you and share with you. Let's go ahead and take a look at some of the underlying sectors here within the broader markets. And again, as I usually do, this is a 2-month daily chart. Gone ahead and added an RSI indicator and sorted it descending. So we're going to get the strength up here, the upper left quartile, and then down in the lower right are going to be your weaker areas. So let's take a look. Pretty defensive here with staples and materials up here in the forefront, but we also saw a nice move into financials, not overly exuberant. It was flat for the week compared to the S&P that was down 2.2%, but we'll in the next segment here identify why and where within those financials. Industrials, I talked to you about factory orders, the improvement in manufacturing activity with that PMI. So we are seeing a nice move, but it was down 1.2% overall, but down half what the S&P was down. So let's take a look. We can see technology did get hit, and normally when we do this process each and every Friday, we would oftentimes see XLK and XLC up here in the forefront with the consumer discretionary as well. So discretionary and commercial services held in a bit better, but let's go ahead and take a quick look at this technology in sector chart. And we can see again, similar to the NASDAQ, pulled back just to that 50-day, and buyers did come in and support. The technology sector did close above that 21. So this is really quite constructive, I will say, and very good to see. And let's go ahead and drill down even further, taking you behind the scenes and a good look at some of the growthier areas. That is my specialty and where I traffic. But I also want to see where other areas are and have how they have performed relative. So unfortunately, the VIX is up here in the forefront. We did see a big pickup in volatility over the last couple of days, but in fact, the VIX was down on the day. So another constructive piece of the puzzle, if you will. I did also want to point out the yield on that 10-year Treasury. It did tick up today, 15%, and I talked to you about financials doing well. The higher interest rates do bode well generally for financials. So let's go ahead and take a quick look at this next strength area in the underlying ETFs. And KRE, this is your regional banking ETF. Not overly exciting, but definitely worth noting. We got significant volume on this week's rally in KRE, and I ideally we'll have time at the end to share with you, because not as you can see, this regional banking ETF is still below this downward trending 200-day simple moving average. Ideally, I'm going to be on the prowl for stocks that have already broken up, and there are more than a handful that can be that look constructive if you are looking to broaden out your portfolio to include financial stocks, because they are also part of the recovery play, if you will, the sense that the loan defaults will not be quite as significant and they will bode well. So really, the other two areas that I wanted to point out very quickly as it relates to these sub-industry groupings, this first is semiconductors. As you know, those of you that watch this show each week, it has been a real true leadership area. These semiconductor chips are needed in just so many areas, including cloud computing, digital centers, manufacturing, elsewhere. But we did get that sharp pullback in line, certainly with a lot of these higher growth areas. The good news is that semiconductors found support at this upward trending 50-day, and down really only 2%. So that's quite constructive. Software stocks, another area that is very near to my heart. A lot of big growth step up here and hit a new high. Also found support, upward trending 50, closed the week above this 21-day simple moving average. So by and large, generally quite constructive into the close for this week. I'm going to take a very quick break here. When we get back, I'm going to share with you the 2016 September market period, and from there we will go ahead and cover those stocks that withstood the market weakness and are poised to continue to outperform. We'll be right back. During every bull market, there are a select set of stocks that far outpace their peers. They trade much higher and much faster than the rest of the markets. The reason? These select stocks have a set of characteristics that history has proven are common among big, winning stocks. My easy-to-follow course will teach you the skills of a lifetime so you can learn how to uncover and then successfully trade these fast-moving stocks. Take my 5-part course now by going to meminvestmentresearch.com for this limited time offer. And we are back. We're going to just take a very quick look here at the September period going into the most recent election in 2016. What I'm going to share with you is a bar chart, and this is going actually from July to November. And of course, these higher bars are those that outperformed. And we can see quite clearly that technology was a big winner that July into November period. And then communication services, another area, and financials actually did well going into that election. So this was just more of a point of reference, but from my work, the concept that technology did outperform, currently that is viewed as an essential area given the current lockdown and conditions that we are in. So here's a daily price chart of the S&P 500. This is taking us from the beginning of September right into that election. Now, I'm not saying that we will get a precise similar reaction now, but just have in the back of your mind that historically it can be quite volatile, and it certainly makes quite a bit of sense given uncertainty and the market's desire to not have uncertainty. But I will say, despite this uncertainty during that 2016 fall period, there were pockets of outperformance, and I pointed out to you technology among them. So let's get back and take a look at other areas that we did want to cover as it relates to stocks and areas that did outperform this week. So I'm going to begin by sharing with you did not mean to do that intraday, but it certainly does the trick as far as consumer cyclical. I'm going to be really focusing on areas where economic reports that have come in are showing improvement, and certainly consumer confidence has come in. It's not at a great level, but it is improving, and consumer sentiment as well. So I'm going to share with you some of these retailers among consumer discretionary that are holding up well. And again, they are not only just going to have a nice chart, they also are going to have a backdrop fundamentally that will support a continued uptrend. Here we're looking at Nike and KE, a daily price chart. And by the looks of this, you would not know that the broader markets had a difficult period. It pulled right back to this upward trending 10-day simple moving average. It's currently residing here at about a 112 level. Analysts have raised their target to 150, as high as 150 for Nike. A couple of reasons. One is that the company is restructuring. They're laying off up to 10% of their employees. Foreign exchange tailwinds are helping them. Nike is a big part of their sales is emanating from China. And then also the company, their back to school sales have been so far surprisingly robust. So that was one stock I did want to share with you. Target is another stock, and each of these retailers I'm sharing with you are going to have one very common thread, and that is their ability to pivot during this period and really build on an already strong digital sales platform. This is Target. Take a look. The stock shot up last week. They came out with earnings 86% year-over-year earnings growth, revenues 25%, just blew their estimates away. Huge volume characteristics. But what we are seeing here is the stock pulled back, but really not so much given how overbought, pulling right back to this upward trending 21-day simple moving average. So I would keep this on your radar screen. ULTA is another stock that not quite as robust, but they did come out with super strong numbers. The company announced that while their sales were not improving, they did have a high average purchase price increase, which really helped their margins. So the stock shot up here, huge volume, pulled right back to this 200-day simple moving average. They're opening 30 new stores next year, and another one with a high price target. It's currently at 240. Analysts are looking for a 300 price target, but like some of the dynamics going on here, positive RSI and MACD, as the stock is poised to break out of this nice 3-month base. So keep your eye on that one. Another retailer that did come in with good numbers actually this week. And this is, again, the haves and the have-nots is what we are seeing among retailers. Those that are, in this case, Five is opening new stores. They have really ramped up their digital sales. So we can see FIVE broke out of this nice, lengthy 3-month base, broke out huge volume. And again, you would not know what happened as far as the broader markets given the dynamics with this particular stock. They also opened 63 new stores during the second quarter, but really this base breakout on the gap is what has me really quite interested in this stock. A couple more, and then we'll move over into some other areas as far as the recovery play and so forth. This is Gap GPS, and the company really has done a lot in the way of a turnaround. This is a gap up on their earnings, 58% above estimates. So in a very confirmed uptrend, finding support at this upward trending 10-day simple moving average. And then Dick's Sporting Goods. This is one of the last standing big box sporting goods stores, and another gap up on very strong earnings, 155% year-over-year growth, huge volume, pulled back very nicely to this upward trending 10-day simple moving average. From here, I do want to go ahead and share some other perhaps just a couple more in the consumer space that are definitely bear taking a close look at. This is Starbucks. I wrote an article about this stock back here when it first broke back up for StockCharts.com in August. You can take a look at that because it was all about innovation. Again, those companies that can pivot to new delivery ways of innovative ways of making their services better, faster. And we can see subsequent to that that the stock has had this very nice base breakout of a 2-month base, continuing its uptrend, really outperforming the broader markets this week. Another one that has also really shifted product and sales innovations. I guess people are liking their coffee is Dunkin' Donuts, DNKN. They closed a number of stores a few months back, but now in a nice confirmed uptrend. I did also want to take a look at some of these industrial stocks because that is an area that I talked about, factory orders, the PMI numbers. So there are definite names that bear taking a closer look at with an eye toward a continuing recovery. This is XLI, that sector group graph for the industrial sector. I've gone ahead and ran some screens and we can see, I'm just going to share a few names that are just remarkable because they held, this is Federal Express, and I've talked about this in the past because they've had these gaps up due to pre-announced sales numbers. They are actually increased customers due to this pandemic. They really have seen a huge pickup in demand for their delivery services, and the stock gapped up here, very confirmed uptrend. There is anticipation of an increase in their costs, or actually in the what they will charge because of this increase in demand. So analysts and the markets really like this stock. Another area that we can just take a quick look at, because these stocks do continue to pick up. They're not quite an area that I would fish in, if you will, but a lot of these airlines, they are starting to pick up nice confirmed uptrends. This is Delta Airlines, broke out of this nice shorter term base, but it's all going to be dependent on how they perform as it approaches this downward trending 200-day simple moving averages. These airlines are removing change fees and so forth. American Airlines, not quite as dramatic, but I will say, or as attractive. I did go on a flight last week. I flew from the West Coast to the East Coast. The airlines, there's a lot of people traveling, so that was really quite eye-opening. Another area that we can take a look at in these industrials, Navistar is a name worth noting, but this is all about potential Volkswagen takeover. So I'm going to leave it at that for those recovery areas. One quick note that we can take a quick look at how you can uncover these stocks. This is StockCharts.com. The financial sector, I talked about yields improving the outlook here, and we can see that bank stocks, I did mention that. So from my work, if I'm on the prowl for these stocks, I am going to want those that have a higher StockCharts technical rating, and then also larger. I like the more liquid names, and lo and behold, this is one of 3 financial stocks on my MEM Edge list. We identified this a while back. When it first began to break up above these simple moving averages, it has continued to outperform. And I will tell you, hands down, this is the leadership name among financials and among bank stocks, finding support at this upward trending 10-day. They do a lot in the way of refinancing, money management, other areas where they are a bit more buffered from potential loan defaults. And one other quick stock that we can take a look at here, but again, this is more to point out to you how you can uncover stocks in a given group. Not quite as dynamic, but at the very least, this is Deutsche Bank. The stock is above those simple moving averages, making it a bit more generally attractive. And let's go ahead and take a very quick look at another sector. And I talked to you about industrials and the airlines doing well. Let's take a quick peek at delivery services. It's a smaller group. We can see FedEx is up here, but there are some smaller stocks. Actually, that is not. I did want to take a quick look at EXPD, and I will leave it at that. This is a stock that helps these uh, airline, or actually delivery services, with their logistical help, and very much in a nice confirmed uptrend, and the stock is really holding in quite well. And one other area that we can take a very quick look at, again in the industrials, are some of these heavy construction stocks. And again, for my work, I want to see these stocks that are up there in the forefront with their scooter rating in nice confirmed uptrends. This is an add-on to the big move we've seen in construction and builders. But again, this is how you can get your arms around some of the better looking stocks in these recovery as well as other areas. I'm going to leave it at that. For those of you that have not already, I urge you, take a look at my MEM Edge report. You can use the link below. I have a special offer for a 4-week trial. You'll want to be able to stay on top of these markets. Take a look at the recovery in these tech names. And in this weekend, I will be highlighting stocks that look attractive after having a very difficult 2-day period. Have a great long weekend, everyone, and I will see you next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.